All right, welcome. Today, we're going to dissect the anatomy of a precision trade entry. We're going way beyond just simple patterns to look at the real engine of the market. We'll be using some powerful tools like order flow and auction market theory to really, refine our execution down to the very tick. Okay, let's jump right in. So, let me start by asking you something. Are you still staring at your charts, drawing lines, and just kind of hoping, or let's be honest, guessing that some level is going to hold? If that sounds familiar, you are not alone. And there's a really good reason for it.
It's because that old way, well, it's static. It's based entirely on what's already happened. And you can see the difference so clearly here. On the left, you've got the old way, subjective lines on a chart. But on the right, that's the new way. It's dynamic. We're visualizing the actual orders, the real buying and selling, as it happens. Look, this isn't some kind of magic trick. We're just making the invisible visible.
So, here's how we're going to break it down today. First, we'll cover a new way to see the market. Then we'll learn the essential vocabulary you'll need. After that, we'll find our high probability kill zone. Then we'll walk through a real trade, step by step. And finally, we'll put it all together in a simple, actionable checklist.
First up, Section 1, a new way to see. This is all about making that huge mental shift from a static view to a dynamic one.
Okay, here is the single most important idea you need to grab onto. Price is moved by one thing, volume and the execution of orders. It is not moved by patterns. Think of patterns like footprints in the sand. They show you where someone was, not where they're going. We want to be right there, watching the battle itself as it happens.
Okay, so how do we watch that battle? Well, that brings us to Section 2. First, we've got to learn the language. This is the vocabulary of the edge.
So there are really just 4 keywords you need in your vocabulary. First is delta. That tells us who's winning the fight right now, the aggressive buyers or the aggressive sellers. Then you have big trades, which is exactly what it sounds like. It shows us where the big institutions are putting their money to work. A volume ledge, well, think of it like a cliff. It's a spot where interest just drops off, creating a really weak point in the market. And finally, absorption. This is when you see a huge amount of effort to push the price, but it just goes nowhere. It's like someone flooring the gas, but the car is in neutral. That is a massive clue that a reversal could be right around the corner.
Okay, this is where it gets really good. Now that we can speak the language, we can start finding our high probability hunting ground, our kill zone. This isn't just about what to look for, but where to look.
But hold on. Before we even think about pulling the trigger, we need one thing. Context. Because context, trust me, is king. First, you need a clear breakout from a previous area of balance. Second, you need acceptance, where the price proves it's comfortable outside that old zone. And the implication? It means the market is actively searching for a new level of value, and that gives us direction.
So, once we know the bigger story, then we can pinpoint our kill zone. And check this out. Our kill zone isn't a guess. It's an intersection of real data. Here, you're seeing the value area high from the prior session lining up perfectly with a big cluster of those big trades we talked about. That confluence, that overlap, creates a super high probability zone. That is where we pay attention. Okay, enough theory. How does this actually look in a real trade? Let's dive into a case study and see the anatomy of a trade unfold.
Okay, so here we've got a short setup during the London session. So the context is the market broke down below its prior value area. The setup is that price then pulls right back up into that kill zone we already defined. And what's our action? Simple. We wait. We're not guessing here, we're watching. We need the sellers to prove to us that they are still in control.
And boom, here it is, the trigger, the moment of truth. Price comes right into our level. Now look at that dynamic data. See that huge spike in negative delta? That's a wall of aggressive sellers stepping in and saying, nope, not today. This is absorption happening in real time. The buyers are trying, they're pushing, but they just get absorbed. That failure, that is our green light. Now we can enter short, put our stop loss right above that block of volume, and we have a clearly defined super low risk entry. And this is why this approach is such a game changer. Think about it. A lagging indicator, like a moving average or something, is still crunching numbers from the past. By the time it finally gives you a signal, the best part of the move might already be over. But with order flow, we're seeing the fight happen inside the candle, in real time. This allows us to execute instantly, right at the turning point.
All right, let's wrap all of this up into something you can actually use. This is our final section, the precision entry checklist, your 4-step framework. It really boils down to these 4 simple steps. 1. Check the profile. What's the big picture? Is the market trending? 2. Define your zone. Where's that high probability spot we talked about? 3. Wait for the trigger. Watch that real-time order flow for the signs of failure or absorption. And 4. Execute. You get in with a clearly defined risk based on the volume you just saw. That's it.
At the end of the day, it all comes down to the simple truth. The only thing that moves price is volume. When you really understand how the auction works, you remove the need for guessing. You're not predicting the future. You are simply reading the auction as it's happening, right now.
So I want to leave you with one final question to really think about for your own trading. Are you actually reading the live auction as it unfolds? Or are you just staring at a history book